If you are thinking about using Kikoff to build your credit, the big question on your mind is simple. How much does Kikoff actually increase your credit score, and is it worth paying for? In this video, I will break it down clearly, based on how Kikoff works, what affects your credit score, and what kind of results real users typically see. Let us start with what Kikoff is. Kikoff is a credit-building platform designed for people with no credit history or poor credit. It does not give you traditional cash loans. Instead, it reports a small line of credit or installment account to the major credit bureaus, as long as you make your payments on time. The goal is to help you build positive payment history, which is one of the most important factors in your credit score. Now to the main question: how much can Kikoff increase your credit score? There is no single number that applies to everyone. Credit scores are personal, and the impact depends on where you are starting from. However, based on how credit scoring works, most users typically see an increase of about 10 to 40 points within the first few months. Some people see smaller changes, while others see bigger jumps, especially if they are starting with no credit at all. If you have no credit history, Kikoff can have a strong impact. When you have no score or a very thin credit file, adding your first reported account can create a score or raise it quickly. In this case, it is realistic to see a 20 to 40 point increase after 2 to 3 months of on-time payments. This happens because payment history makes up about 35% of your credit score, and Kikoff helps you build that history. If you already have a credit score but it is low, say in the 500s or low 600s, Kikoff can still help, but the increase is usually more gradual. In this situation, many users see around a 10 to 25 point improvement over a few months. Kikoff works best when your main issue is missed payments or lack of positive accounts. It will not instantly fix serious problems like defaults, collections, or bankruptcies, but it can help balance your profile over time. If you already have good credit, Kikoff will not make a big difference. If your score is already in the high 600s or 700s, the increase may be very small or even unnoticeable. Kikoff is not designed for people who already have strong credit profiles. It is mainly a starter or rebuilding tool. It is also important to understand how long it takes to see results. Kikoff usually reports to the credit bureaus within the first month, but real changes often show after 2 to 3 months of consistent payments. Credit building is not instant, and anyone promising huge results in a few weeks is not being realistic. Now let us talk about why Kikoff can increase your score in the first place. There are 3 main reasons. First is payment history. Every on-time payment you make adds a positive record to your credit report. Second is credit utilization. Kikoff keeps your reported balance very low compared to the limit, which helps your utilization ratio. Third is credit mix. For people with very limited credit, adding a new type of account can slightly help your overall profile. However, Kikoff also has limitations. It does not replace real-world credit use. Lenders still want to see things like credit cards, auto loans, or other installment loans. Kikoff should be seen as a stepping stone, not a final solution. It helps you qualify for better credit products, but it is not meant to be your only account forever. So, is Kikoff worth it? If you are trying to build credit from scratch or recover from a low score, Kikoff can be worth it. The cost is relatively low compared to secured credit cards or traditional credit builder loans. If your goal is to qualify for a credit card, rent an apartment, or improve approval chances for financing, Kikoff can help move you in the right direction. On the other hand, if you already have access to a secured credit card, or can become an authorized user on a well-managed account, those options may offer similar or better results. Kikoff works best for people who have limited options and want a simple, low-risk way to start improving their credit. Before signing up, it is important to be honest about your expectations. Kikoff will not magically add 100 points to your credit score overnight. What it can do is help you build consistency. Over 6 to 12 months, that consistency can make a meaningful difference when combined with good financial habits. To get the best results from Kikoff, always pay on time, do not miss payments, and use it alongside other responsible credit actions. Avoid applying for too many new accounts at once, keep your balances low, and monitor your credit report regularly. In summary, Kikoff can increase your credit score by about 10 to 40 points for most users, depending on your starting position. It is a useful credit-building tool for beginners and people rebuilding credit, but it works best as part of a bigger plan. If you understand what it can and cannot do, Kikoff can be a smart step toward better credit and better financial opportunities.